All right, welcome to my weekly review. You're looking at a daily chart of the Nasdaq, which is pretty much a trendless index right now. You know, if you want to go through this review exercise activity, we had this cup with handle breakout here in May, and we had a nice 18% run up to July 18th or 19th. And I know everybody sold at the top there, right? And got out and was all cash for this 9% peak to trough digestion or pullback or correction or whatever you want to call it. So we had a nice trend up and a trend down, but now we've got this little choppy type of action here, which is, like I say, without trend. So this is the toughest market for someone like me who likes trends. I like to follow trends, and we don't have a trend. But if you look at the weekly, I mean, in a trendless market, there's something for the bulls and the bears. And the bulls are going to say, you know, on the weekly, this is a nice cup with handle pattern, and we're just going to digest here in September, and then we're going to rip to new highs at the end of the year. Okay, that's one school of thought. You know, this is what makes a market. But the bears are saying that this is it's kind of like a head and shoulders looking action here on the Nasdaq. We have the left shoulder, and you got the head, and the right shoulder here it's two highs. It's strong. It's been working out, right? Been doing its military presses. Ideally, if you wanted to short, you'd see like a Gumby shoulder here just on its way down. But so, like I said, there's something for everyone here in a trendless market, and you can create your own narrative. But I tend to just let it play out one day at a time. I do not trade indexes. I trade stocks. And this is one that got hit with something that she said when it has got the iPhones banned by Chinese government officials, and there's a lot of finger pointing or nobody knows exactly how this will impact their sales, which are pretty weak to begin with. I mean, if you look at the quarter over quarter sales here, you got red numbers down here. So, and then single digit EPS growth. So Apple has been struggling. You know, the law of large numbers are catching up with it for sure, but it's just in a base still. It's consolidating. It sliced its 50, which is to me is a red flag. It sliced its 50 earlier after earnings, and it formed a little base here. Then it rallied back through, and we've seen a lot of these, pullbacks and then rally back through the 50, but this time it failed. It does have somebody was mentioning that it's going to fill the gap here on what's the low there, 181.47. The high yesterday was 180.24. So it did fill this gap here when it gapped up yesterday at 178.21. So the low there was 177.79. So perhaps it will fill that gap, but it's just consolidating in a base. It's not below the 50. I don't like it, but it needs time. So we're going to give Apple some time. I'm just going to go through these mega cap tech stocks, the Magnificent Seven. There's the good, the bad, and the ugly. And we're looking at the ugly here with Tesla and Apple below the 50. This thing has tried several times. First of all, it sliced it easily. Took forever to rally back up to it. Now it just keeps bumping its head up against its 50. I'm going to talk a little bit about Tesla later on because there's definitely finding support at certain moving averages. The next stock that I want to go to is Microsoft because it's looking a little better than Tesla. And Apple, it finally got through its 50 simple moving average. It's 0.5% above it, but you can see it's just forming a base. Looks a little better than Apple's. Now it's above its 50, right? So it was didn't have one of their products banned in China, so that makes a difference, I guess. Meta looks similar to Microsoft, but still really struggling at the 50 there. Still, 0.8% below it. So Meta has work to do. The three that are doing best are Google, Amazon, and Nvidia. I'm going to start with Google. This one definitely, if I go to the weekly here, this is a weekly review. You can see the base here, pull back to the moving average, and now trading higher. The Nasdaq was down, nearly 2% last week, and this one is up 0.5%. So definitely outperforming. Amazon is another one that I like here. It's formed this little base, pull back to a moving average, trading kind of tight. Yeah, that that one I like. Looks a little different here. You can see this consolidation, flat base, 5 weeks. And we're seeing a lot of charts with 5-week bases, which is not long enough. You know, I'd like to see a little, longer bases, but we can't always get what we want, right? So we have to deal with what we have and play with the market, whatever the market's giving us. So that was Amazon, and the last one I'm going to go to of these is Nvidia. I'm going to start off, I'm going to take you down the negative road and bring you back on the positive path. Nvidia, for these mega cap tech stock, it is making these higher lows here. It's got this trend line that coincides with the 50, but this thing needs to find support at the 50. There's just been a lot of noise around this thing about their fraudulent numbers and Jensen selling stock. This is just this type of garbage you'll find when a stock has had such a big run, and shorts want to take it down and the bulls want to pump it up. So this thing is just probably needs more time, but it's at the 50, so it's not, it's better than most of these mega cap tech stocks, but still not, it's 1% above the 50, but it needs time to me. And September, of course, is not a great time to be making big moves, but it is a good time for digestion. So we'll see how that plays out. I do, by the way, believe in the seasonality, and we're seeing seasonality in August and September. And since I had the Nasdaq up earlier, you can see on the monthly, it's already down 2% this month, on top of last month losses of 2.17%. So if you're trading growth stocks, your growth stocks should be down 8 to 10%, to 2 or 3 times the index. So if you're doing better than that, then congratulations, you're probably in the right stocks then. But I'm going to go through a couple of the semiconductor names, and this one just cannot get out of its own way. Very frustrating stock. You can see this downtrend line, cannot get above it, cannot get above the 50. There's no strength, no power, no volume, no nothing with AMD. So that one to me looks pretty weak. I'm not going to say short it, but it's just a weak stock. ACLS, another one, very disappointing. Sliced its 50 on Friday and is now closed Friday just slightly below that, 1.4% below the 50. So that one, this is just not looking good. And this is on semiconductor, looks a little bit like the index there, closed flat right there on its 50. So just a mixed bag, not looking real strong in the semiconductor space. So now also, I'm taking you down the negative road here. This is Dick's Sporting Goods, sliced everything on the earnings, really weak earnings report, now can't go anywhere. Probably will, take forever to get back up to the moving average and then get slapped down there. So that one looks bad. Deckers, which had been leading, sliced its 50 and now just has no power, just meandering below its moving averages. That one looks bad, but CROX is probably looking worse than all of them here, below all moving averages, no strength, just drifting lower on light volume, down every day last week, no interest, no power, no nothing. So I did mention CROX this week. Okay, so those are the negatives. I'm going to take you back on the positive path now with Elf Beauty. And I talked about those short bases. This is a 5-week base. You can see it pulled back to its 50 and found support. But if you look on the weekly here, since this is a weekly review and I zoom in, you can see this, 1, 2, 3, 4, 5, 6 weeks, let's say, base pattern here that it's trading around this 137 to 114 within that parameter. There it goes, 114 again. You see there's the retest, 114, there's the retest, 114.30, 116, there's a low of 120, and last week's low is 132. So ELF is looking strong. Last week it was pretty much flat, and while the Nasdaq was down 2%. This to me is a decent looking base here. I mean, like I said, you got to take what the market gives, and if it can trade above that 137.48, I'd be interested. Now, this is one with the fundamentals. You're looking at triple-digit EPS growth, real strong sales growth. This company has been delivering the numbers here, and you can see it. Although this, you see 3 digits down here, that's always a good sign if you're long a growth stock. Anyway, that's it for retail. I'm going to move on to the oil and gas, and the Magnificent Seven, the Grade 8, the Divine Nine, whatever you want to call them, they move the indexes, but there is some underlying strength. And I'm going to go through some of these here, and these are not big enough to move the markets, though. These are, 3.6 billion market cap. But Tidewater is definitely doing well, broke out of a base, and now it's trending along its moving averages. And for a trend trader, that's something that I'm interested in. Weatherford, this one is going into the S&P Midcap 400 on September 18th. And this one is, broke out of a base and just trending higher. I should be showing you the weekly charts, but I kind of want to get through this kind of quickly because these are just trending. They're not, ready or watch list stocks. OII is another one. It was on our watch list recently. Had this, cup with handle pattern, then broke out. Now it's a little bit extended, but that one looks good. There you see it on the weekly. The cup, the pullback, and then the last 2 weeks, nice move. Up 3% while the index is down 2%. You got to like that. And PR also is another one. You can see the consolidation here in the breakout. It was down slightly last week. This one also is going into the S&P Midcap 400 with Weatherford. And you can see it's probably going to pull back to the 10 there, around $14. But, consolidation, breakout, nice move for Permian Resources. Anyway, I'm going to move on to the drug stocks. To me, there's only two interested in looking at. This is Lilly, and the Lilly's been spiking a lot lately. And I would personally, I don't own it. I own NVO. I got to say that, but this is looking like, it's trading above its upper trend line. So that would be a good area to trim, but I don't own it. So I can't be opining on a stock I don't own, but it sure has been really super strong. There you can see the base, the breakout, this is a 3 weeks tight, add-on consolidation area. Then it just spiked with earnings. And you might want to say that these two, Lilly and NVO, Novo Nordisk, all the forward revenues priced in, but I'm not so sure about that. I'm not so sure it's all priced in here. This is NVO, and you can see it was consolidating, broke out. Now it's been up every week, 5 weeks in a row, up 3% last week, while the index was down 2%. This one is more of a base here to me too, like ELF. It's not a runaway freight train like Lilly. This is more a controlled type of move. And 192.18 is definitely an area of interest. The 10 EMA here, which is 2.6 above its 10 EMA, was 190.45 on Friday, and that's a quickly rising 10 EMA. So between these two stocks, I own this one. Lilly obviously is the one to own because it's made a bigger move. But if you look at then here's Lilly, up 5.2% last week, while the Nasdaq was down. You want to take a look at these two over time. We just go back 5 years, and I haven't done this recently. Just go back to 2018. Lilly has been just a massive winner, 400%. And you go back, let's say 10 years, and come on, Marty, go back 10 years. What was yesterday? The 8th, 2013, not 2023. And the Lilly has been a big mover. And if you go back 20 years, you could say Novo, just crushing it. So it's all about time frames, how long you want to hold these things. But you can see recently, these things have been nice trajectory here the last 5 years. So anyway, both of those I like, and, the weight loss, the diabetes space, and now possibly cardiology. Those two stocks are going to be, they have a duopoly, and they should be pretty strong for a few years. But you never know in the market, things can change in a day. This is Celsius. You can see last week was up 3.82% while the Nasdaq was down. Just a leading stock here. And I hate to use that term leading. It's a strong stock, okay, in the beverages, non-alcoholic space. They're definitely taking market share. And like I say, these stocks are not moving up because of their the charts. It's got this triple-digit EPS and sales growth, which is driving that stock. The other one is COCO, the beverage stock. This one is a little more tame, calm. You can see it's set up in a base. This was the earnings move, a 25% move, went from 24 to 30. outrageous move, but it's just trending higher. I kind of like its calm nature, and it's just trending along its moving averages. As a trend trader, I like that type of action, and nobody ever talks about COCO. Speaking of quiet stocks that are moving higher, is this HVAC, the air conditioning ventilation space. You can see it was, up 0.5% last week, while the Nasdaq was floundering. You could see this just lower left to upper right. This is a beautiful move. MOD is the stock that's gained the most in 2023, and you can see the last base that it made here was back in the springtime, but it's had a nice run. Strong earnings will do that. Like I said, these triple-digit numbers, got to pay attention to those. On the daily, you can see that it just pulled back to its 21 last week, and it was a pretty terrible tape last week, I might add. This is Carrier Global. This is a spinoff. Pulled back to its 50, and it's just consolidating in a base. It pulled back there to 21 on Wednesday, and then so you can see this flat base pattern here on the weekly. Not bad, up 1.24%, while the index was floundering last week. That's a 6-week flat base pattern, so that's another one that interests me. That's Carrier. Okay, I'm going to move on from the HVAC and just go to the construction stocks, because they've been doing pretty well also. And you can see this is Quanta Services, just lower left to upper right. Not a lot of thinking here. Yeah, it was down 2.7% with the index last week, but you can see over time this has been a big winner. STRL Sterling, this one gave back 5.5%, which is kind of normal when the NTNX is down 2%. Pulled back to its 21. Maybe it'll find support there. We'll see. And VRT, it's not really, this is more of a play on the Nvidia AI, but I'm going to throw it in here with the electrical power equipment group, and it just pulled back to its 21. It's had a huge move. I wouldn't mind seeing this do something like this, make a little base here, or even a flat base. But right there, trading around 40. It's hit 40 several times and been rejected. So maybe it'll form a base. Anyway, I'm going to move on to cybersecurity stocks. CrowdStrike doing very well. Had earnings recently. The stock spiked, and now it's had this little consolidation with a 162 buy point, 8-week flat base pattern there. So CrowdStrike looks good. I'm going to get into the other ones too, Okta and Palo Alto Networks a little bit later, but this is Zscaler. You can see this double bottom pattern, and another one that looks to me like it's consolidating in a little base here that looks actionable. So maybe we'll look for that on our ready list here soon. And I'm going to end with the gaps higher. And you got to pay attention to the gaps higher. In a real bear market, you're not going to see, or a downtrending market, you're not going to see these things gapping higher in earnings and just ripping, 20% more. This is a big move for Splunk, 12% move. It closed at 112, and now it's at 124. So, it tacked on another 10% gain after a big breakout. ANF, which is Abercrombie and Fitch, another gap. So, the gap day last was $50, and now it's 53. So, like I say, in a downtrending market, these things would fill this gap here, and just, they gap up, then they sell off. So that's encouraging for me, and tells me that maybe the market's just digesting gains. Another one is DELL, which is a pretty big company, pretty big move here. The last was 68.19 on the breakout day of September 1, and now it's at 70.50. So it's tacking on to gains. So good for DELL. Reminds me of 1999, the way that one's moving. NTNX gapped higher, and it didn't sell off. I mean, so that one is it's a one positive. NTNX, let me see, what was the next one here that I had? Oh yeah, Okta. I want to talk about Okta and Palo Alto Networks. So this had a nice gap higher, and it closed at 83, and now it's at 87. So it's tacking on gains. They're not gapping and crapping. They're gapping and holding their gains, or maybe even advancing a little more. Palo Alto Networks gapped higher, pulled back to the 21. Now it's higher than the close of the the 240 there, which was the gap on that Monday morning after they announced earnings on Friday. That was August 21st. So that one looks good as well. IoT is another one that reported recently, had a nice response and didn't sell off. It's holding its gains. And CLS is another one. This was on July 27th, so it was a while ago, and they'll close at 1801. Now it's at 23. So this one's just trending along its moving averages. And if you're looking for an entry, this little wedge pattern here looks pretty good to me. For flag, wedge, whatever you want to call it. CLS looks good. And this week, I'm going to end right there, I guess. This week we have Oracle reporting on Monday and Adobe on Thursday. And I do have one more thing that I want to show you, and that is these moving averages. If I switch these to the 65 here, for some of these stocks that have sold off recently, I'm talking about SMCI, which I wasn't going to talk about because it burned me, because I wasn't paying attention to the 65. And all it did was pull back, it sold off and pull back to the 65, then bounced on Friday. So this is not an indicator that I have. I use the 10, the 21, and the 50, but I'm going to have to start using this. A lot of these are pulling back to their 65. MDB, MongoDB pulled back to the 65. Now this is just consolidating in a base. It ran back through the 50 and then pulled back, but definitely one that I am watching. Builder, First Source is another one. Pulled back to the 65, actually went below it, rallied back through the 50, and then pulled back to the 65 again. And is now closed right about its 50 on Friday. So definitely an indicator to watch out for. Yeah, it's slightly below the 50. Another one is Broadcom. Can't get their ticker symbol, AVGO. And this one pulled back to the 65, ran up. So as you can see, this consolidation period. And then last week during the sell-off, pulled back to the 65, had an inside day on Friday, but it's still 1.9% above the 65. So that's a decent move. And a couple other ones that I want to show is Meta. Pulled back to the 65, found support. Now it's just finding resistance at the 50. And the last one is Tesla, and this one pulled back, and it's trading below the 50 but above the 65, just going back and forth. They're getting tighter and tighter. So I kind of like the way Tesla's moving there. And I did say that was it. I added one more thing, which was the 65 moving average. That's my weekly review. I do have some new stocks that are on my ready list this week that I think look pretty decent. And I did say one more thing in honor of Steve Jobs. I'm going to go to GTLB, which I kind of like this little setup here. I'm not looking for a major breakout, but if it pulls back to a moving average and finds support bounces here, that might be decent for a trade. Anyway, that's it for me this weekend. At MC Stock Charts, we never give up.